As China reopens, factories in Southeast Asia appear to be firing up. Options for Malaysia to record higher revenue. Why is there a push for the goods and services tax, GST? The ringgit's performance. What are the factors adding pressure on the Malaysian currency? And what initiatives are required to address the cost of living? I'm Azaria Tagaya, and this is Money Matters. Hello there and welcome to Money Matters. Today we're joined by the World Bank. Its senior economist Shakira Sharifuddin is right here in the studio with us. Hi Shakira, thank you so much for joining us.
Thank you for having me.
Well, it's our pleasure and thank you so much for making time for us on Money Matters today. So we're talking about Malaysia's growth. Before we dive deeper into what we're going to expect this year, let's take a little step back and take a look at Malaysia's growth for the past year. So in terms of growth for Malaysia last year, did private consumption actually have a significant impact, and also what about some of the other areas? And also, while we're talking about that, the big question is, will Malaysia be able to avert a recession this year? What's your take?
Okay, so I guess we can start by talking about growth last year in 2022, and then I think it was an exceptional year for most of the regional economies, but particularly for Malaysia. And essentially, that's attributed to several factors. So I think first thing we can think about is one big common denominator was the reopening of the economy that we saw in April last year, where many of the countries and regions started to open up the economy post-pandemic. Yeah. And that certainly had a lot of positive spillovers into the various countries, Malaysia included. So particularly in tourism, in retail and services sectors, these are the sectors that saw a lot of positive spillovers from the reopening of the economy. In fact, I think at the bank, we conducted this rounds of survey called Business Pulse Survey, which is basically trying to see how businesses are performing throughout the pandemic. And really what we saw, one of the things was in the last round of survey that we did, post-reopening, is that sales have started to turn positive for firms. So that's one big, I guess, driver for the exceptional growth that we saw last year. And obviously this translated into improved labour market conditions, for example, and again, that contributed to spending. And then finally, I think that third is in terms of the government, various government support measures. So we had, for example, Bantuan Keluarga Malaysia, BKM, that definitely contributed or boosted private consumption. So it was the minimum wage implementation. But I think for Malaysia specifically, and what really drove private consumption last year was the allowance of withdrawal from EPF. And that certainly provided a lot of impetus for private consumption last year. Now, to answer your second question, which is whether or not we're going to, face a recession this year, I think recession means a decline in growth, but we're not expecting that for 2023. We are expecting growth to continue, but obviously at a more moderate pace, which I think we'll discuss a little bit more later. But overall, it's not a recession story for Malaysia this year. It's just, I guess, the main narrative is a moderation in growth.
Okay, so on a major outlook, what do you think will be the growth outlook for Malaysia for 2023?
Sure. I guess before we go into Malaysia's growth, let's take a few steps back and look at the global perspective first. So at the bank, we are forecasting growth to be about 1.7% this year. And that's a sharp deceleration from what we estimated for 2022, which is about, I think, 2.9%. And that's basically been driven by three broad factors. So number one, we still expect that there will be a continued monetary policy tightening in advanced economies. And I think we are also expecting a prolonged tension in the Russia-Ukraine story. And also globally, there is tightening financial conditions. So in terms of global growth, we are expecting a sharp deceleration for 2023. But if we sort of move closer to the region, I think for the region we are expecting 4.3% this year. It's a moderation from last year, and basically it's because there is sort of a slowdown in demand after sort of like the pent-up demand that we saw last year dissipates. And so sort of taking this whole scenario into mind, so what's the story is for Malaysia? So for Malaysia in 2023, we are expecting growth to be at 4% this year. So obviously it's not as exceptional as last year, where I think we are currently estimating at 7.8%, but it's still a growth, but a moderation in growth. I think one big factor that we took into consideration in this moderation is, of course, the expectation that external demand will cool down or will slow down. As I've said earlier, in terms of global growth, we are expecting a slowdown. That probably would translate into a slowdown in external demand, and that would have an impact on Malaysia as well, particularly in terms of exports. So, for example, in terms of exports, we are expecting growth in exports to be 2.2%. Certainly, it's not as sharp as what we saw last year at 13.2%. But domestically, we think private consumption will still be the main driver for growth. Now, obviously not as robust or as strong as last year. Like I said, it was an exceptional year last year, but given that the recovery in labour market continues, we should expect this, and especially other forms of government support measures will remain in place. This will definitely continue to support private consumption, at least for this year.
Okay, interesting. Now, let's take a little look at the reopening of China, because a lot has been said about how this is going to significantly impact and positively impact economies around the world. So, do you think that this will have much of an impact on Malaysia, and how much so?
Well, certainly China is one of Malaysia's largest trading partners. So, whatever happens in China, certainly there will be spillover effects on Malaysia. And I think that's one of the downside risks that we've highlighted in terms of our growth projection. We estimated that, for example, a 1 percentage point decline in China's growth, for example, would have a 0.7% percentage point decline for Malaysia. But we're talking about the reopening of China's economy. I think it's still early days. I think for us, we are still looking at having a wait-and-see approach. It could have positive spillover effects. So, for example, in terms of tourism and FDI, we are already gradually seeing influx of tourists into the country. And again, that could translate to positive spillovers in tourism, as well as foreign direct investment. At the same time, it could also provide some buffer, given the fact that we are anticipating a sharp slowdown in advanced economies. So any pickup in China's economy could provide an upside risk for growth as well. But it all depends on several things, and basically it depends on how China is going to play out in the next few months. Firstly, I think in terms of how it will manage some of its macroeconomic challenges, for example, in terms of its debt level. But also I think a large part of it hinges upon how China would sort of learn to live with the pandemic as well. It's what we've done in the last year or so. So any sort of resurgence or big outbreak may sort of have a recent or sort of have a negative spillover to the economy.
Do you think this has been actually priced in by the markets, the possibility of like a resurgence of infections after the reopening of China?
I think so far everybody is taking that wait and see how it's going to play out. But at least the early indications that we've seen so far, it hasn't translated into that yet. But as we've learned in the last few years, things can happen in an overnight. But like I said, I think the for China it's still to some extent, it's still a question mark, but it can be, there are some positive upside to Malaysia's growth from China's reopening.
Indeed. I guess, as you said, wait and see, and we'll see how it turns out for China and for the global economy as well.
Exactly.
Well, Shakira, it's time for us to take a short break. We'll be back after this on Money Matters, more with the World Bank. Don't go anywhere. Thanks for sticking with us on Money Matters. You're still with me, Azaria Tagaya, and we're still talking to the World Bank with its senior economist, Shakira Sharifuddin. Shakira, before the break, we talked a little bit about what we can expect from Malaysia for this year. Now, let's take a little look at FDI, because we know this is going to have an effect on Malaysia's economy, on the overall. So, in terms of FDI, multinational corporations are increasingly looking to Southeast Asia as a production hub. So, what is the level of Malaysia's attractiveness at the moment, right now, as we speak?
So I think it's not a new trend. So ASEAN in general has been a relatively attractive destinations for FDI, including Malaysia. And that's been driven by several factors. I think one is in terms of the competitive wages that we offer in this region. Another is, I think, in terms of the overall business regulation and business environment. It's relatively easier to do business. No, I'm not saying it's very easy, but it's relatively easier to do business here. And I think at the same time, there's also good infrastructure that could help, push investments into the country. And again, Malaysia is one of the countries that has benefited from FDI over the years. But I think one challenge for FDI in Malaysia is that over the years, the FDI model that Malaysia has employed before this is dominated by labor-intensive industry, for example, low-cost modes of production, high reliance on imports and goods and services, and there's very little linkages with domestic industry. So I think what the government has done, I think in the last few years or so, and I think it has communicated its aspiration when it comes to FDI for Malaysia through the NIA, the National Investment Aspirations. And I think what it seeked out, or what the government is thinking is having a new sort of investment FDI environment. So basically attracting quality investments into the country rather than just bulk FDI into the country. And there are certain parameters or certain dimensions that the government is looking at. I think one of the things is what you hope to get is FDI that would sort of increase the economic complexity of the country. It has linkages with domestic industry, so it's not just coming here and produce and leave, but it has connections with domestic industry as well.
Indeed.
It has the ability to create high-skill jobs, and that I think is very important, especially when we talk about cost of living and the need to increase wages and improve the quality of life for Malaysians. That's an essential part of what a quality FDI should be going forward. And I think one final thing is I think it has to create or has foster an environment of R&D or create some kind of new economic clusters within the country itself. So I think if we talk about FDI, that's the main narrative that we are seeing right now for the country.
I see.
Yeah.
All right. Now, on the slide of the value of the ringgit compared to the US dollar, what are some of the pressures that are adding to Malaysia's currency?
Okay. So when we sort of talk about the ringgit, I think let's take a look and understand that Malaysia, first of all, is a small, open economy. And our domestic financial markets are integrated with the global financial markets. And because of this, the domestic financial markets is always susceptible to two-way flows, so movement of money in and out of the domestic financial markets. And this movement of flows are usually driven by not just domestic factors, but what's happening in global environment as well. So it could be tightening in the advanced economies, monetary tightening in advanced economies, for example, and expectation, geopolitical tensions, for example, in other parts of the world. All of these factors do contribute to how flows move in and out of the country, and that translates to where ringgit is. I think thus far what we see is the ringgit's flexibility has been a key shock absorber. So whenever there's a commodity price decline, for example, or volatile external flows, the ringgit is the first to absorb some of the shocks, and that's been quite helpful for the country. What we have done an analysis in the upcoming Malaysia Economic Monitor is we sort of look at what's the impact of depreciation on the economy. So what we saw was a 1% depreciation in the ringgit could translate into 1% increase in GDP growth. But of course, there is an offsetting factor in terms of, with depreciating ringgit, import prices obviously would increase, and that plays a part as well. But I mean, it's not basically an issue of, it's basically the point on ringgit is that you should allow the market forces to sort of determine where it is. And I think what the central bank has done over the years is just to manage the volatility around the movement.
Indeed.
Yeah.
All right. On terms of the OPR outlook,
Yeah.
do you think that more monetary tightening is actually expected in 2023?
All right. So for last year, I think BNM raised, if I'm not mistaken, 4 times consecutively. I think the first 3 monetary tightening it was largely due to monetary normalization, given the fact that the economy is on a strong recovery path. So that was, I guess, the drivers between the first 3 OPR increase. The more recent one in November, I think it takes into account the expectation, or at least the anticipation, to manage some excessive risk, risk of excessive demand on prices, and balancing risk to inflation to growth. So I think the most recent MPC in January, it was they kept the rate at 2.75%. And it's basically because there is a lag in terms of economic developments. So I think what the central bank wanted to do, has intention, is to take stock and see how the first 4 rate hikes have sort of played out in the economy. And I think in terms of what we can expect going forward, it's always a balancing act for the central bank, because in addition to inflationary concerns, it also has to balance growth outlook and growth perspective as well. At the same time, I think the central bank always have in mind in managing financial imbalances, whether or not low interest rate for a prolonged period of time could have an impact on financial imbalances.
Okay, now very quickly before we go for the next break, I also want to ask you about the decline in government revenue, which appears to be narrowing the fiscal space. Do you think there will be any improvement, or do you think this trend will continue?
I think in terms of just, broad statement, if we look at the government's medium-term fiscal plan, TFF, in terms of revenue, the government is expecting revenue to decline this year. So I think in the latest estimates by the government, it is at 15% of GDP. So that's where we're heading.
I see. Yeah. All right. Fantastic. Well, it's time for us to take another short break. We'll be back after this, more with the World Bank on Money Matters. You're still with us on Money Matters, and we're speaking to Senior Economist at the World Bank, Shakira Sharifuddin. Now, Shakira, talking about improving revenue for the country, some people have said that it's not entirely a bad idea to introduce the goods and services tax, GST, albeit perhaps with some adjustments or improvements. In your opinion, what would be some of our options to actually increase our revenue?
Okay, I think when we talk about revenue, I think let's understand the trend in revenue for the last few years or so, so that it gives a better understanding. So for Malaysia specifically, our revenue trend has been sort of on a steady decline since 2012. So back then, 10 years ago, our revenue collection was about 20% of GDP or so. And mentioned earlier, for this year, we're expecting revenue to be at 15% of GDP. So clearly, there's been a decline over the last 10 years or so. And then if you compare Malaysia with other countries with similar levels of economic development, even then, we can still see that there is a gap in terms of our revenue collection. So for other countries, for example, they collect around 20% to 25% of GDP in their revenue. Malaysia, again, 15% of GDP. So clearly, there is a gap there. And I think this has contributed to the narrowing of fiscal space. And basically, it's the ability for the government to put in additional resources when it needs to. And so going back to your question on revenue, what are some of the options available? So there are several sort of things that can be sort of looked at in terms of the menu or toolkit that the government has. One is in terms of looking at the personal income tax framework. There are several ways to make it more progressive, and basically meaning, you know, the more you earn, the more you sort of pay tax. One of the ways is introducing a cap on the overall amount of tax reliefs. So basically, right now you can claim, but there's no sort of overall limit on how much reliefs you can sort of claim. So that can be a possible option. And another thing is in terms of the reliefs within the personal income tax framework is that some of the reliefs benefit more on the high-income earner side. So, for example, there is relief for gym subscription, so which usually is undertaken or basically subscribed by those in the high-income group. Another thing is to widen the personal income tax base, and that can be done by, you know, possibly including interest and dividend income, for example, and then basically playing or adjusting the income tax personal income tax threshold. So basically, we lower the taxable income tax threshold, basically bringing in more high-income individuals to the highest tax rates. And at the same time, it could be an option is to raise the highest tax rate for those, again, high-income individuals. So that's the option in the personal income tax. And I know the perennial question, the question is on GST. I think the question is, why is GST sort of being pushed? And I think it's basically an argument of efficiency. So the keys for, you know, why there's a push for GST, number one is it provides nearly twice as much revenue compared to the current SST framework. And then it's also reduced distortions. And then it's more transparent than SST. Of course, you know, the caveat here is it has to be implemented well. So basically, that's the argument why there's a push for GST, an argument for efficiency. But I think any literature out there would say, and it's already proven that GST is highly regressive, which means, you know, those in the lower income groups would usually bear the brunt. And so the design of GST framework, you know, if we're going into that direction, is it has to make it include some elements that make it at least a little bit more progressive. One is probably, for example, introducing exemptions for goods that are usually consumed by lower income households. And then if you look at examples from other countries around the world, the implementation of GST or VAT, for example, is always complemented with some targeted cash transfer for poorer households. So this is to sort of offset the impact on GST itself.
All right. So when we talk about inflation and how this is affecting the consumer, we always hear the word cost of living. This is one of like the biggest concerns for Malaysians nowadays. So how do you think the Malaysian government can actually address the issue of the cost of living, especially in the near term?
Sure. So cost of living, it's usually a catch-all term. So for many of us, we think cost of living is a situation describing a rapid increase in prices, which is one side of the story. But of course, the other side of the coin is also about income growth. And for many households, for certain households in the country, particularly lower income households, younger workers, for example, income growth hasn't kept up with the trend in prices. So addressing cost of living issue, it requires both a combination of short-term as well as medium to longer-term policy or measures. Relatively, what we're seeing so far is a lot of the measures are more short-term in nature, more ad hoc and more fragmented. And there's nothing wrong to it, because I think in the short term you need to do as much and introduce as many things to alleviate cost of living concerns. But I think over the medium term or longer term, some of the things that has to be considered is, for example, deepening the social safety net. That's quite key. And boosting market competition and allowing policies that would promote competition, which would then translate to lower price of goods and services. That's one of the things to be considered in the medium term as well.
Okay. Another thing that we're hearing a lot about these days is the rising cost of food prices.
Okay.
So with the surge of food prices that we're seeing currently, do you think that Malaysia needs to introduce perhaps a new type of food policy in the future? And if so, what do you think we need to look at in the near term?
Okay. In terms of food security, so food security has been a concern, particularly, at least in the case of Malaysia, we've seen food insecurity being a concern, particularly for lower income households. So we did a survey among households during the pandemic. So about 20%, or 1 in 5 poorest household, and basically these are households that are earning 2,000 ringgit and below, reported that they ran out of food 30 days prior to the survey. And the incidence of food security or food insecurity in Malaysia has been sort of increasing. So it is estimated, at least in the last 2 years or so since the pandemic, that about 5 million people are facing severe or moderate incidents of food insecurity. So in terms of food policy going forward, I think we go back to the question on cost of living earlier, in terms of, first of all, promoting more competitive policies in the agriculture sector. So, for example, a lot of the subsidies right now in the agriculture sector goes into production of paddy or production of rice. But when we look at the dietary trends in among Malaysians, for example, that trend is sort of shifting. So it's not so much rice-driven, but also other cereals and other grains as well. So opening up competition and channeling the resources to more efficient productions of crops, that will be helpful in terms of food policy going forward. Yeah.
All right, fantastic. Well, Shakira, it's been amazing speaking to you for the past half hour, but unfortunately, that's all the time we have for Money Matters this week. Thank you so much for making time for us.
Thank you for having me.
It's our pleasure. Well, that was Shakira Sharifuddin, Senior Economist at the World Bank, taking a look at Malaysia's growth outlook for 2023. Hopefully you've enjoyed today's conversation as much as we have. Money Matters will be back again next Saturday for more money insights that matter. Till then, I'm Azaria Tagaya. Thank you so much for watching and have a great weekend.